I'm going to share with you some major and critical factors you need to consider before you begin trading boom or crash on the Deriv platform. So these are very important points you need to be aware of before you start trading boom crash on the Deriv web platform. So um, let's dive in.
This video was brought to you by SoGit. Buy or sell your Bitcoin and perfect money on SoGit.com. We will pay you instantly within 2 minutes. Sign up today at SoGit.com/register.
First of all, you need to be aware that before you can open a trade on a boom and crash, as you can see, I'm on my MT5 platform on Deriv, and this is my live account, which I just want to show you with this video. This is my real account. So before you can trade boom or crash, like for example, we have the boom 1000, boom 500, and the other ones. So the lot size that you'll be able to use has already been predetermined by Deriv. So what do I mean by that? The lot size that you can use to trade on any boom or crash indices on Deriv is between 0.2 to 50. So that's it's also known as the volume. So between 0.2 to 50. So no matter your equity, your balance, your lot size that you can use on the platform for derivatives between 0.2 to 50. So 0.2 is 20 cents per pip or 20 cents per change in the price movement. So that's the minimum. Then the maximum is 50. So you must take that into serious consideration. On the Deriv MT5, the Deriv company did not display the leverage, so you can't see the leverage that has been set on your account. That's your MT5 account that you want to use to trade, because Deriv, as their company policy, they won't show you the leverage and you cannot change it. So about the leverage, what Deriv said is that, let me just show you the message. So Deriv's response is that kindly be informed that the leverage is set to default upon account creation and cannot be changed. The margin rate determines the leverage at the symbols level. You may visit this link, so like that, blah blah blah. Okay, so they also said again, we have an intention to provide our services to a wide range of clients so that even those who don't have a lot of initial capital could try trading our products with small capital and make a decision whether trading is suitable. With that said, we are unable to amend the leverage as it is set by default for every account. Nevertheless, it is totally up to you to control your exposure, and there are ways to avoid unnecessary risks. So what this means is that Deriv company has not disclosed the leverage on MT5 on any of the boom and crash indices, so which is unusual. Unlike other brokers, for forex brokers, you can actually change the leverage on your accounts to probably a higher leverage or a lower leverage. We have things like 1 to 1000, 1 to 500, 1 to 100. Even some brokers offer leverage as high as 1 to 2000, 1 to 3000. So you can always adjust it to suit your risk appetite. But on Deriv, you don't. On the Deriv MT5, you don't have access to that settings or feature. So what you need to know now is that for you to trade on this boom and crash indices on your MT5, you just need to just get the minimum balance that is required. Because for example, if you know the leverage on your account, or you can change it, that way you can actually calculate correctly the minimum balance or the minimum margin you will need to open a trade. So the advantage of leverage is that if you are a very good trader, if you know what you are doing, you can use a little balance to open a trade, so that you will not be risking so much of your capital in case the market goes against you. So if you want to trade boom or crash on the Deriv MT5 platform, of course, like I told you initially, the minimum lot size you can open is 0.2, which is 20 cents per pip. So for such a trade to open, you just need to come to this new order. You can see on my account I have a balance of 3.99 USD, which I just want to show you for the testing. So if I come to new order, let's say I'm under this boom 1000 index. If I click on new order, and then let's say I want to take a trade with 0.2, I'll just take on sell, and you can see what the system said. It said not enough money. So this is the message you get when your account balance or the balance on your account is not enough to take a trade with this lot size. This is a minimum lot size, like I told you, 0.2, or volume, which some other people know it as, that you can use. So you must take that into account. But if you try other indices like the cash 500, we can try if 0.2 will go. So I just want you to know about this. If I try okay, still on 0.2, let's say we'll try buy. All right, if you can see on cash 500, we're able to open a buy trade with 0.2 volume. So that will show you that the leverage for opening a trade with cash 500 is or the margin required, sorry, the margin requirement to open a trade on cash 500 is not as high as that required to open on boom 1000. So this is how a Deriv set it, and they didn't disclose the actual leverage. So what you need to just do is that whenever you want to trade, you just need to be aware of this before you trade on any of the markets. So let me just close this one here. Okay, so let's try on the boom 500 if the leverage can still work on this. Let's say we also use 0.2. Let's see if I take on sell. Okay, you can see it also went on boom 500. We're able to open a sell trade. So these are what you need to be aware of before you trade boom and crash, because the minimum margin you need to open a trade, you need to have it in your account balance before you can open a trade. So I just close this one here. All right, but if we try this now on the boom 1000, let's see if it will go. Let's see. You can see on the boom 1000, this same margin that we have is not enough to open a trade on boom 1000. Okay, let's try on cash 1000. Let's see if the trade will be able to go. Let's say we take a buy also. Let's try buy. All right, so now you can see the difference in the different indices. So you know that there are some particular in market or index that the margin requirement may not be as high as some other. So that's one important feature you need to take into consideration before trading on boom and crash, if you want to use the minimum balance as possible. So let me just close this. Okay, all right, so so the next important factor you need to consider before trading on boom and crash, probably as a beginner or for the first time, is that on boom and crash indices, unlike traditional forex brokers, Deriv, your stop loss or stop trailing stop, they will not work. So if you are in a trade and you open a trade on boom or crash, and you have set your stop loss, your take profit, so Deriv has said that your stop loss and take profit, they may not be honored, so you have to take that into consideration, meaning that your stop loss are actually useless when it comes to reacting to the volatility of the market. So if you have opened a trade on, let's say, this crash 1000 index, and you open a buy trade, now you can see the crash 1000 is always in a buy trend. Then after some certain interval, it will make a downward spike. So let's say you open a buy trade here and you set your stop loss just below this sell candle here, okay, and you set your take profit, of course. So now let's say the market just spike down immediately. If your stop loss is just at here, let's say 6896.74, and let's say the market spike down to around 6890, as you can see there, Deriv will not honor your stop loss that you set here. So the market the market will take you out at the end of the spike, so you are going to lose more. So you must take, that is very important risk consideration that you must add in your analysis before you start trading on boom and crash. They will not honor your stop loss, and we'll just make a good practical of that now. And apart from that, even your trailing stop will not also be honored. So we have stop loss, then we also have trailing stop. So the trailing stop feature is when you are already in a profitable trade and you adjusted your stop loss into the profit side of your trade. So if the spike comes, the trailing stop that you have already have in place will also not be honored, and it's your trade will be closed at the end of the spike, which is a negative experience for you. So let's just take a trade for you to get the picture clearly. So I'll just take a trade now, and we'll wait for a spike to occur so that you know that, so you can get the true picture that stop loss is not being on. So let's just take a trade on okay, let's take a trade on this boom 500 index. Of course, we'll take a sell trade because the boom 500 is always in a downward trend, to wait for a spike above. Let's just take a trade on the on this, and then we'll see how it goes. Okay, so we'll take a sell trade. All right, so I've taken a sell trade. So I'll just quickly set my stop loss. I just set my stop loss around here. Okay, so I'll just set my stop loss around, okay, let's say 4179. Okay, so now you can see I've set my stop loss. You can see that we're on the sell trade. My stop loss is 4179. So we'll be waiting for a spike to occur. So once the spike occurs, we'll see where the market will take me out. Okay, normally if a spike occurs, my stop loss should be honored because I've already that's what I've already asked to be, for you to take me out of the trade. On a normal settings, your stop loss is meant to be honored, but because of so many other considerations, and the brokers will always tell us that the market will not honor your stop loss because of the volatile nature of the symbol that you are trading. So that's what they always say. But for those of us who have been trading for a number of years, especially in the 90s, back then stop loss, they are always honored, no matter the magnitude of the spike or event or fundamental news event that occur in the market. But in the last few years, is in the 2000s, the brokers no longer honor stop loss, and they just take you out at the top of the spike, which is against you. So let's just wait for a spike to occur. I may forward the video so as not to waste time if the trade just continues to go in a sell trend. So we're just waiting until the spike come in place. All right, friends, as you can, I hope you saw what happened just now. A spike just occurred right now, and you can see 4180. So let's just check. You can see our balance is 3.35. So let's just check the market. So you can see my history here. You can see my history here. You can see my stop loss was 4179, and you can see the price that I was taking out, 4180.46. So you can see which is not my stop loss. So the market, you can see my stop loss was 4179.18, 4179. 0.18. You see, my stop loss was around this region. You can see the line in my cross in the crosshair. I can see the top of the spike. It took me out at 4180.46. So you can see this is what I'm talking about. Yeah, even above the spike. It took me out above the spike. Of course, the broker will also add their spread in a opening or closing of order. So you can see it is way above my stop loss. So these are important factors you need to consider, and I end up losing more than I ought to have lost, So this is what you must consider before you start trading boom and crash on them on the Deriv. Your stop loss will not be honored. You will be taking, if you set a stop loss, you'll be taking out at the top of the spike, at the ending of the spike, if you are in a sell trade, and if you are in a buy trade, you will taking out at the bottom of the spike. So you have to take that into consideration before trading on the boom and crash indices. So these are important fixtures that you need to be aware of before you trade on boom and crash. First of all, remember that to trade on the boom and crash, the lot size minimum that you can use on the Deriv is 0.2, and then the maximum is 50, and then the leverage, Deriv won't display it for you to change it or to check it. They don't display it for you. And secondly, your stop loss is not honored. Same with trailing stop. Assuming we're on a trade, your trailing stop will not be honored. So that's just what happens on the boom and crash. Your trailing stop will not be honored, your stop loss will not be honored. So make sure you do your due diligence, you make your right analysis before entering into any trade, because the spike can occur at any point in time and your entire capital may be at risk. So thank you for your time, guys. I hope you enjoyed this video. If you are a Nigerian watching this video, please remember that our company is called soget.com, and we can assist you in funding instantly your Deriv account. And if you want to withdraw also from your Deriv account, you can also contact our company soget.com by simply going to our website soget.com and registering, and you will be able to instantly fund your Deriv account and also withdraw from your Deriv account. Soget.com is a verified and approved payment agent for Deriv in Nigeria. So we'll look forward to seeing you in our company and use our services. So thank you once again for your time. I hope you enjoyed the video. Please give it a like and share it with your friends, and I will see you again in the next video. Goodbye.
This video was brought to you by SoGet. Buy or sell your Bitcoin and perfect money on SoGet.com. We will pay you instantly within 2 minutes. Sign up today at SoGet.com/register.